Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Jingyi Goodnight TV on January 16th, Friday. I'm Huang Pengri. Today, let's look at a few topics. First, although there was some opening high and closing low, the ups and downs of tech stocks also did not entirely meet expectations. Overall, though, we still see a trend of capital flowing back into the tech sector. In addition, when it comes to overall positioning or certain strategies, it might still be better for us to take a more balanced approach. We'll discuss more on this topic in a bit. Also, I'll introduce Onto. I'll talk about what kind of company it is and why there are currently some opportunities with it. Alright, so there aren't any particularly notable data points this week, and next Monday's a holiday, so trading today should be relatively light. Recently, the US dollar index hasn't shown much volatility either. It looks like there might be a chance for it to slowly move upward, but as for how far it will go, that's still uncertain. Looking at the performance of other currencies, if the yen and other currencies remain relatively weak, the US dollar index might still have room to move higher. But on the other hand, if we look at interest rates, we can see that rates haven't really moved much over the past few weeks, or even the past few days. So in this case, in the short term, there is a slight upward trend here. Now, since a rate cut in January is becoming less and less likely, in fact, the probability of rates staying unchanged in January is almost certain. So the 2-year yield is starting to show signs of moving up. As for 20-year yields, there still isn't a clear direction yet, but in the past 2 days, there has been a more obvious upward movement. So regarding this upward movement in interest rates, we'll probably have to wait for the January FOMC meeting and see what more they have to say about their outlook and expectations for the economy, as well as this. Only after the meeting's conclusions are released will there be more clarity on the direction. The situation from 20 or 30 years ago is pretty similar. You could say there was a rebound, but it was relatively weak. Overall, it's still a trend of range-bound oscillation. All right, next, let's look at the stock index situation. Okay, so actually, as for yesterday, overall, many stock indices opened too high, but whether a high open can close high, that's not necessarily the case. For example, with the S&P 500, it opened high but moved lower throughout the day. So overall, compared to the previous day, it was an increase, but during yesterday's session, it wasn't really that strong. There wasn't a significant inflow of capital to drive it up, so it didn't close with a notable gain. As for the small cap indices, they actually performed relatively well. They opened high yesterday and closed even higher. The S&P, on the other hand, hasn't closed higher in a while and ended up closing lower. So from a quantitative perspective, things look a bit different. Recently, there's been ongoing sector rotation, and non-tech sectors are still getting a lot of capital support. You can see that tech stocks were similar. They opened higher yesterday, but actually closed lower. So while they did go up, the overall structure wasn't that strong. Next, looking at the Philadelphia Semiconductor Index, the pattern is even more obvious. It gapped up at the open, and the increase was quite significant, but it also showed a pattern of opening high and then moving lower. Now, let's look at the other stock indices. Looking at the Russell 2000, it also went up and showed some upper shadows on the candlesticks. So for now, it seems that in small cap stocks, we haven't seen any signs of funds moving out or any ongoing sector rotation. As we mentioned in the past few days, going forward, we need to see whether the earnings reports of the big tech companies can boost the overall performance of large cap tech stocks. For now, it's mainly small cap stocks that have been performing over the past few days, while large cap stocks have been relatively stable. If you look at the S&P in this cooling off period, you can see it's the same situation, meaning that it's mainly small cap stocks moving, while other stocks are also showing some activity. However, yesterday there was a bit of an upper shadow on the candlestick chart, so we can observe whether, going forward, the market sentiment will calm down a bit or become more stable. Alright, now looking at global developments, the report says that the Republican Party is stepping up efforts to resist Trump. Greenland has plans against Trump, and as for Trump, he hasn't given up on taking military action against Greenland, or even taking over the whole place. Greenland's idea is pretty funny. And as we mentioned before, Trump and the US, well, the US and Denmark, do have a military agreement. So actually, the US hopes that if they want to increase their military presence across the ocean, that's something they can do, and they don't really need to make any extra effort. But now it seems that Trump has some additional demands. He wants to take over the whole place. That's his current situation lately. So, about this whole thing has actually sparked a lot of internal backlash. For example, Republican Senator Tom Hills mentioned that if Trump really intends to use military force to invade Greenland, he believes that both Republican and Democratic lawmakers would set aside their differences and unite to oppose Trump. Basically, they want to stop Trump. In addition, Trump could also be facing the risk of impeachment. Besides them, actually, many Republican lawmakers are also extremely dissatisfied with and opposed to Trump's actions. So right now, it seems like this part is basically, this is it. The issue has now become a point of contention within the United States itself. This is our first point of conflict, and later on, we'll see other points of conflict as well. And then there's the Alternative for Germany party, which has been quite vocal in Germany and has had some presence in parliament, either as a party or with some seats. At the moment, it's actually the largest opposition party, but now it's starting to distance itself from Trump. In the past, they were pretty supportive of Trump, or at least their views were quite similar to his. But now, because of a lot of issues that have come up, especially in Europe, they're starting to keep some distance from Trump and aren't as close to him as they used to be. Yes, you can see that actually, when it comes to Greenland, their attitude is pretty straightforward, just like with Venezuela. It's kind of like, well, if they act quickly, things can be wrapped up. And then the next step is to start discussing how to stabilize the oil companies, or whether Venezuelan oil or minerals can be, shipped or transported to the United States. These are the kinds of administrative or operational issues that come up. As for this, actually, it should be the case. First, remove even more of these kinds of things. It's about allies, the significance of NATO's existence, and also the Western value system. So now, actually, the repercussions or aftershocks of this will be quite significant. As for Trump, it's possible he could end up completely isolated and abandoned by everyone. We'll just have to wait and see. For now, just remember that this personal case has already become a relatively major point of contention within the United States, or even within the Republican Party itself. Another point of contention is the immigration enforcement policy. A few days ago, we also mentioned that people have started to lose trust in Trump's immigration policy. But this isn't happening in a vacuum. It's happening against the backdrop of people not trusting Trump's economic policies. So now, both economic and immigration policies are areas where people are starting to lose faith in Trump's administration. Going forward, Trump actually faces a considerable threat, and that threat is him. The election could end up with a good candidate, but what's happening now is that because of this immigration policy, people are starting to feel a bit worried and dissatisfied. That situation has also caught the attention of members within Trump's own team, and now internal doubts and questioning are starting to emerge. The Republican Party has even conducted internal polling on this. In 2024, independent voters will be very important in Trump's path to victory, as well as moderates and minority voters. In 2024, many people who are either supportive or critical of Trump may end up voting for him. As for these people, actually, our support for Trump or our favorable impression of him was already starting to unravel before the big market crash. In 2024, during Trump's campaign rallies, the support for Trump from these people, whether through podcasts or YouTube, has gradually shown some shifts in attitude. In recent news, you can actually see a lot of this. Their comments and some of their attitudes are changing. These people are actually quite important. Whether or not the Republican Party can maintain control of both the House and Senate in November really depends on them. If the Republicans actually lose the House, then they'll become a lame duck. And being a lame duck means that for the next 2 years, they basically won't be able to get anything done. Yeah. After that, he might face the risk and crisis of impeachment. So this is actually quite serious, because as I see it, on the Greenland issue, if Trump insists on sending troops, there could be fierce opposition from within the Republican Party itself. And when it comes to immigration policy, it seems like there's also starting to be some internal pressure. So right now, it looks like the US is dealing with a lot of internal conflicts and struggles. So how will this affect things? As of now, this snowfall hasn't had any significant impact yet. All right, so looking at the market next, from the World Cup perspective, the first few days of this week didn't really show any standout performance. It was only after TSMC's earnings report that the tech sector got a boost. Before this boost to tech stocks, days 1, 2, and 3 were dominated by small cap stocks. Yesterday was the first day under the new system, right? So actually, a lot of tech stocks opened high but ended up closing lower. Looking at the way things opened and closed, it seems that overall confidence in many tech stocks is still lacking. One reason is that their valuations are already quite high, and people still don't have much confidence in their future profitability or growth paths, even though TSMC said as much too. It looks like we'll need a few more companies or a few more rounds of this kind of situation. Whether it's more people or different companies, this narrative could potentially strengthen the bullish trend. So right now, it's probably just a matter of time. We need to wait until the end of January for more tech companies or tech giants to release their earnings reports. I think we'll need to reflect deeply into February, and as more companies start to announce the results, the narrative will gradually become more complete. This will give investors more confidence, and we'll be able to support it from various angles, cross-verifying whether their perspectives can be validated. May I ask, is it coming through more clearly now? I'll bring it a bit closer, yes. So this is the current situation. The tech sector's rotation might still need some time, but it could just be a matter of time. So what we're seeing now is that small cap stocks are still rising, and as time goes on, the tech sector might follow suit. They might start rising again, and if that's the case, it would actually be a very healthy sign. It means the breadth of the US stock market is increasing. After the short-term stocks start to rise, the tech stocks get pulled up as well, and then the entire index goes up together. This could be a sign of what's to come. So at this moment, it's still better to recommend a balanced portfolio, because right now, a lot of things are more long-term, or in the current environment, the next clear investment direction, how should I put it? It's like metals. We're seeing things like mineral exploration and the defense industry. Why do we say this? Because what we're seeing now is a situation where globalization has disappeared and the major powers are starting to compete for territory. And they also want a sense of security. To have that sense of security, they need to proactively secure the supply of these critical minerals themselves, either within their own countries or in areas they can control. As for metals, as we've mentioned before, they have different industrial values. They serve as a hedge, reflect distrust in the system, and also, it's kind of when the world order is relatively chaotic, these things will show their value. Local culture and the military industrial complex, this goes without saying. Right now, everyone is basically in a state of readiness for war. It seems like there's no end in sight, and many wars are still ongoing, especially the Russia-Ukraine conflict, which is still being fought. So these groups will be relatively in this situation. Right now, the investment direction is pretty clear. If you invest in them, there's a chance to profit. And you can also see a longer investment timeline with these groups, because in the past, some of them were cyclical. When the cycle ends, they might take a break. But now, because of this, changes in the environment or pressure from competitors make it so that they might not have the chance to take a break. The possibility of taking a break is reduced because there are national policies in place to restrict them, or there are real survival needs, which means that the demand for these products will continue to increase. This steady emergence is the current situation. Okay, so right now, overall, because tech stocks still tend to open high and then drop, tech hasn't really shown any outstanding performance yet. Against this backdrop, small cap stocks will continue to outperform, that is, perform better than large cap stocks. I didn't see this in the previous few slides. Although yesterday the Russell and S&P had a strong performance, right now the main trend is opening strong and then closing even higher. All right, so this is actually based on the statistics compiled here, starting from 2025. After the new year, there are some more obvious trends, and by 2026, it's even clearer. Small cap stocks, like the Russell 2000 index, have shown a much more significant increase, outperforming both the Nasdaq and the S&P 500. So the question is, can this trend continue? Looking at it now, it seems like this trend will probably continue for at least a while. So at the moment, everyone can consider small cap stocks, see if there are any you like, and keep investing in them. In addition, a lot of officials here have made speeches recently. And to sum it up, basically, they're hinting that the next policy move might not necessarily be a rate cut. The main reason is that the island market is relatively stable and inflation continues to persist. So, this is the current situation. Like I mentioned a few days ago, many consumer staple stocks have been going up, and the reason behind their rise is actually the potential for ongoing inflationary pressure in the future. We tend to focus on consumer staple stocks like BG and TLTR. Previously, their sharp increases happened in a particular environment. If you look back, you'll see that they went up significantly in 2022 when inflation surged. So this stock also went up yesterday, and the recent upward trend is very clear. That means we should keep paying attention to how these consumer staple stocks are performing. If these stocks keep rising, it actually indicates that the pressure is actually gradually eating away at things bit by bit. Right now, when it comes to consumers or just the general experience of daily life, sometimes the data can be delayed or revised, and it might not reflect the current situation accurately. So we look at stock prices or the content of company earnings calls to cross-check and verify the situation. Another thing is that Trump and several governors from states in the northeast of the US are jointly pushing for wholesale electricity auctions, requiring tech companies to pay for electricity costs. The idea here is to separate out the defined costs, because it looks like tech giants are now starting to use electricity on a massive scale, which is beginning to crowd out electricity for everyday people. If this actually goes through, for this kind of household, at least they won't be as affected. Although overall electricity prices in the US are still on an upward trend. What could be the result? If we agree to auction off electricity at this short-term price, then what happens? This could allow companies or organizations with resources and capabilities to get even bigger. For example, the four major CSB operators like Google, Amazon, Microsoft, and Oracle. These companies have the money to pay for electricity, but some companies might not, like, for instance, or companies like Wi-Fi's Nebuchadnezzar and Aaron. In the end, these smaller emerging companies just don't seem to have as many resources. Or you can say that their services and business offerings aren't comprehensive. For these companies, they might end up staying relatively the same. So what we're seeing is a trend, whether in the physical market or the investment market. It's becoming even more obvious that in the future, there will be this situation. Good companies will continue to do well, while bad companies might keep struggling. This actually echoes the K-shaped trend in the real economy. In other words, with the K-shape, those who are already doing well in the real economy will likely keep doing well. And for those who aren't doing well, things might get even tougher for them. That's just the current situation. So it's not only happening in the real world. In areas like investing or in the securities market, you can see this kind of phenomenon in many places. All right, and another thing is that Ford is currently in negotiations with BYD. It's possible that BYD will supply the batteries needed for Ford's overseas factories, but it looks like this plan is being opposed by U.S. lawmakers. They say that U.S. trade advisors have also started to oppose it. They believe that what Ford is doing is wrong, and that Ford should be working with American allies or domestic companies, not with BYD. But it's understandable why Ford would want to cooperate with BYD, mainly because BYD is currently the largest in the world in this area. BYD is the top seller of electric and hybrid vehicles. Even though they can't sell in the US, they have strong markets and performance in Latin America, the Middle East, Europe, and Southeast Asia. So right now, it looks like Ford is partnering with BYD mainly for business interests. So the main reason for the opposition isn't really about business. What we're seeing now is that if the world starts to split again, it's like if we start from non-commercial interests and from a perspective that's not about globalization or free trade, there will be a lot of unnecessary waste and losses. This is just one example, and actually, this is also. I haven't seen that. If the US adopts this kind of worldview, it will actually hinder the performance of its own companies, and as a result, it could end up weakening its national strength. So this approach might actually be a bit counterproductive. In other words, at the beginning, they wanted to change their stance, start being wary of China, or believe that global trade is unfair. They wanted to use politics, but their national strength is. Maybe through this series of actions, they're actually accelerating the decline they're trying to prevent, and then accelerating the disappearance of their own influence. So this is something I've observed recently. I'm just sharing this topic for everyone's reference, and I think we'll probably see more and more of this happening in the future. Also, there's another interesting piece of news. The American Chamber of Commerce in China recently conducted a survey. So even though Most companies still hold a relatively pessimistic view about the future of China-US relations. The level of pessimism has actually decreased. Meanwhile, the percentage of optimistic views has seen a double-digit increase. So right now, these companies are still actively looking for opportunities. There are still nearly 60% of American companies planning to increase their investment in China. So you can see that even though at the national or political level, the two countries are becoming more hostile or less friendly toward each other, there is still some room for maneuver when it comes to business interests. So actually, we can observe business activities. If business activities really do follow the same pattern as political activities, if business activities gradually decrease, then that's actually something we should be even more concerned about. Because if entrepreneurial activities, which are more grassroots, more influenced by the forces of capitalism or the trends of the credit-based world, are still operating, then both sides will continue to have exchanges and interactions. But if even these activities disappear, then that's actually a pretty significant warning sign. Alright, next, we're going to talk about a company called Onto. Why are we talking about this company? Because it's in the US semiconductor equipment sector. And as we all know, semiconductor equipment stocks are one of the most prominent areas of growth within tech stocks. There are a lot of companies everyone knows, like AMAT, Lam Research, and KLAC, and companies like TER, among others. But this particular company isn't mentioned as often, so let's talk about it and see if there are any investment opportunities. This company's main business is comprehensive surface inspection for semiconductors. They do a lot of things, including optical metrology, 2D and 3D wafer defect inspection, as well as lithography system and process control analysis. They also develop software and process control tools. The main focus of this company is on these areas. This. As semiconductor manufacturing processes become thinner and require more advanced technology, there will be some edge processing, which can create debris and cracks. These issues can This can cause wafer losses, and the cost of such losses is very high. So we need more precise equipment to perform detection and inspection. This is where Onto comes into play. You can see that Onto's main source of revenue comes from systemized software. As for the regional breakdown, previously, the main markets were the United States, China, and Taiwan, and that's still the case now. However, the proportion from China has been gradually declining, while Taiwan's share has been steadily increasing. By the most recent year, 2024, Taiwan's share has already exceeded 30%. This company is a leader in inspection for HBM and advanced packaging of logic chips. It can support front-end bare die production, as well as wafer processing facilities. It also has advanced packaging and testing setups for the back-end, so essentially it can handle both the front-end and back-end processes. It conducts collision testing, and on the back-end, connectivity and interaction can be achieved through software. This company mainly focuses on the complexity of chip manufacturing. In this year, it expects that over 60% of its revenue will come from this type of business. Its revenue from the AI supply chain is direct, so it's deeply tied to current advanced processes or advanced chips. At the same time, it's also a leader in HBM and logic chip memory, and currently in this area, its HBM4 testing has passed customer validation, and it's expected that more customers will start adopting it this year. This year, there's a possibility of significant business growth expected. Every time we talk about progress, it's HBM. The demand for this continues to rise. As we can see, moving forward, it will also be. First, the lens is a very important and key component. So if production of this item increases in the future, Onto's business will also see a corresponding or even substantial boost. So you can see that the company's products are relatively well developed across different areas, that is, in these kinds of applications. For the chip stacking layers, they have different inspection tools, and they can actually perform very detailed inspections. For example, even within a single small stack, there are 334 different inspection devices installed. And when it comes to the details, everything is really well taken care of. For example, on the whole wafer side, there are many different small tools. Like this ATA series, it can provide this kind of used to locate key dimensions, then measure wave patterns and some characteristics of the sound source, and so on. To apply these esports boats and eye protection lines, And then there's the Novus H, which is used to detect the front and back sides as well as the edges of different wafers, checking for any contamination and so on. This is all done at a very tiny scale. It's considered a highly precise and advanced technology. And finally, you also have to use the element to scan and check if there are any impurities in the chip, because what it actually does is provide comprehensive detection to see if there's anything, like contamination, defects, impurities, and so on. Alright, so as we just saw, this company's products and services can be integrated throughout the entire value chain, from the very beginning to the end. They have a variety of different devices to suit different purposes, and throughout the whole process, across the entire industry chain, they offer corresponding comprehensive solutions. So that's one of their current advantages. Now, this company can also assist with the transition to advanced packaging. Right now, advanced packaging is actually shifting from round wafers to square wafers, because it seems that the square ones, there's basically no, well, it's just more efficient, and there's basically no waste. That's the current situation. As for Onto, they can also help by providing faster and more efficient testing. At the same time, their testing can achieve greater safety and completeness, while also ensuring quality and so on. So that's the current situation. Alright, so besides these, are there any other advantages overall? Well, as we just mentioned, there are quite a few advantages. Like, it can integrate resources from both the front end and back end, whether it's a niche or specialized fields, it has very detailed products. But it can also perform a very thorough inspection of a wafer for any different types of defects or obstacles. And it can also handle the transition from a circular to a square wafer, and it can also provide support in this area. Besides these advantages, another point is that it previously acquired Simulab, bringing in charge measurement technology. This technology allows for the measurement of residual charges within the packaging, which helps prevent issues like water ingress during stacking. So this is also one of its advantages. It can further pinpoint and detect whether there are any such problems through these measurements. Other methods check visible defects, not electrical charges. Stacking without this causes losses. Since this tech was unachievable alone, they purchased it. Now, this is a major advantage for them. The company also believes that this acquisition could bring a market opportunity worth $1 billion. In other words, it could expand its market size by $1 billion. At the same time, it could also significantly increase the chances of achieving this year's weekly meeting goals, mainly because of this charge measurement technology. Additionally, regarding the mindset around lithography technology, as we mentioned before, this diagram shows the J-step again. This thing can it can handle many large and complex packaging processes, helping to avoid errors from stitching. This is what we just pointed out. If you want to work with larger sizes, it will have a relative advantage. In addition, there's also this. Its processing speed and inspection speed have always been efficient, and its efficiency has improved, which meets the needs for high volume and high precision inspections. So what sets this company apart in the industry or compared to its peers? What is its position in the market? As for the next company, it actually has certain expertise in dosing and inspection. However, the overall scale of this company is quite small, and its market share is also limited. Its main competitor, which is similar to it, is KLA. KLA, also known as Onto, actually has the advantage of market dominance and resources. So aside from being smaller than KLA and lacking the advantages that KLA has, Onto was also not on par with other major equipment companies in the market. Companies like ASML, Applied Materials, and Lam Research, this company's overall growth is basically tied to the industry cycle. So for this company, it seems that if the overall industry is doing well, or if equipment stocks as a whole are performing well, then this company will do well too. This company might have even greater growth potential. But if the overall cycle is heading downward or not performing well, then the stock price of this company could be more volatile. So overall, it's also more volatile, or you could say that. This means it's relatively more speculative in nature. Although this company's profits and revenue are lower than other listed companies and its peers, the company overall hardly has any debt and holds a lot of cash. So it has a certain degree of flexibility, and it's more of an immediate investment, meaning it's like a high beta stock, that kind of concept. So what is the biggest risk for this company? It's actually the US export controls on China. In fact, we can see that its biggest risk, if we look at the first chart, as shown in the first chart, is that its share of revenue from China's Galaxy is gradually decreasing. This could continue to impact its revenue and profits. In addition, the competition is very fierce. We can see that its competitors have more resources, greater influence, and larger scale. Furthermore, its customer base is quite concentrated. In 2024 specifically, in the most recent fully disclosed year, its top 3 customers accounted for more than half, about 52% of its total revenue. The latest data also shows that the proportion has risen again, now reaching 57%, so the degree of reliance on major clients is quite obvious. Alright, so we can see that the company's stock price has also been steadily climbing. Yesterday, it even jumped by 7.73%. Although there was a strong upper shadow on the candlestick, overall, starting from the past few months, there has been a clear upward trend. So why is this company doing pretty well? It's because it's about to break through its previous high soon. If the company can break through that previous high, it actually has a much broader room to rise, which means there won't be much selling pressure. So going forward, the rise that follows will likely be relatively smooth. Right now, that's the situation this company is in. Besides that, we can also see that many equipment stocks like Lam Research have also recently broken through their previous highs. So for now, this one hasn't broken through yet. So it also means there's still some potential ahead, so everyone can use this as a reference and continue to track and research it going forward. Now, let's take a look at the pre-market strength section. So overall at the moment, in the US stock market, pre-market trading on Friday continued the relatively strong trend from Thursday. Many large or well-known tech stocks showed gains in pre-market trading, such as Micron and Nvidia. Nvidia had a slight increase. But AMD is also up, and companies like Tesla, Netflix, Google, Amazon, and so on are all showing gains in pre-market trading. So overall, it looks like the market sentiment today should be pretty good.
Yeah, at the moment, it actually looks like GEV is also seeing a pretty significant increase in pre-market trading.
Looking at the next section, it seems that some of the movements are related to earnings reports. It appears that the energy sector is showing a slight downward trend, like VST and CEG. There are also some declines in the metal sector, such as FCS and HAM, LB, and so on. Some bank stocks are also experiencing declines, which ultimately comes down to their individual profit situations. Looking at the overall US stock market, you can see that the sentiment is actually relatively positive. Many small cap stocks are also showing a noticeable rise in pre-market trading. Today it looks like things will be pretty similar to yesterday, so we can expect a moderate upward trend. After that, the market will be closed next Monday and then reopen on Tuesday. Next week, as more companies release their earnings reports, we'll be watching to see if first, the rally in small cap stocks can continue, second, whether large cap stocks will start to rise along with the small caps, and third, how things like political factors or, well, these kinds of, whether chaotic events or news related to different policies have any impact on the market. If none of these have an effect, overall, that would actually be a relatively decent situation. Going forward, we also need to pay attention to the upcoming FOMC meeting at the end of this month and see how they set the tone for future economic growth and the current inflation situation. These are some developments and trends that everyone should keep an eye on in the near term. And that wraps up today's market tour. Thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.